Good morning, traders, investors. Dale Sargo, Trader Boys. What a wild ride in the markets there yesterday. It was awesome and amazing. Remember yesterday I said you've got to be hedged. If you're long this market, you've got to have hedges in place. There's many different ways you can hedge the market. The one I mentioned yesterday was call options on the VIX, and they worked unbelievably. What gave us the indication yesterday the market was going to do that is the VIX was going up pretty aggressively as the markets were rising aggressively. These are little indications with people with knowledge and skill and understanding of these markets, how they work, can identify these little intricacies in the market that are going to help dramatically manage portfolios and manage your risk. So this is the type of thing we need to teach you. In today's market, you get the S&P up 5.5, you've got the Nasdaq up 20, and we've got the Dow up, jumping around between 70 and 80 here, and the Russell up 4. These markets were just slightly higher. We've just had a news release, and that's dropped these markets just a little bit. So we're looking for another wild ride in the market today, hopefully. We get the bonds up, we've got oil down, and we've got gold down currently. So if you're not in gold yet, you got an opportunity to get into gold here very, very soon. Big names are up, right? Google is slightly down. Tesla is the crazy one. Tesla was up 16% yesterday. Welcome to Robinhood traders here. They are going to get slaughtered when this market drops. They're going to get absolutely annihilated, and it's not going to be pretty. So welcome to another dot-com period when you're looking at something like this, when you get 10,000 orders an hour coming in from Robinhood. Absolute insanity. Insanity. Delta Airlines and United Airlines are both down. These are just kind of a glimpse into the Corona play. And Goldman and IBM are up healthily, very, very healthily here. Nice little move to the upside there. So let's take a look at the charts. Let's just going to take a look at the majors this morning. We've got the S&P. S&P came right into this top here. We had this little highlighted area in yellow here. I've had that out there for weeks and weeks and weeks. This is when the market came into and reversed hard. We're still higher highs, higher lows in the S&P 500 on the 4-hour time frame here. So still establishing an uptrend. We've got to break this low right here, and then it's game on to the downside, and it is going to fall hard if it can break below this low. So we're looking now at a low base. We're either going to go to the upside here or to the downside. We'll kind of see what takes place here. It's a wait and see game. On the Russell 2000, this thing was absolutely insane yesterday. Insane. Massive move. Came right off the demand level here. Massive move to the upside. And then just fell hard. I mean hard. You can see the overnight here just basically sideways. Still on the, let's come back to a 60-minute time frame. You see on the 60-minute time frame here, we're broken through this area here. So that the demand area is now becoming more of a resistance area. We've got to get below these lows, and if we do, we got continuation. Now there's a huge amount of unfilled institutional buy orders sitting right here. So this is going to be a huge test to see what happens here. Still a good indication to take some risk here and get long the markets. Just be very both-sided on this market, up and down. Don't be opinionated and trade in one direction. We've got Nasdaq. Right? Nasdaq got hit hard yesterday. That was amazing and beautiful. Right down into the demand level. That's where she stopped. Right? So you've got the little demand in here. That was a proven demand right there. Boom, that's where we stop. This is where we're going sideways. Break through that demand. Will be easy to get through this support area. And you're coming down into 10,400 that we posted on Monday. You got lower trend lines, and you've got a demand area here. So that's going to coincide with where the Russell is going to be, and see if we can get the bounce. VIX. VIX was the tell-all yesterday. Big move up. VIX was going up when the market was going up. That is not supposed to happen. So that was the tell-all. Look for the VIX breaks above today's high. We're going to continuation, and this sucker can run if this market starts to drop, and there's going to be good money to make on the call options there if you know how to take that play, advanced play. This is oil. Oil is retracing. We've got news coming out that OPEC is looking to increase supply. So we'll see what happens there. We're going to get the oil report tomorrow at 10:30 a.m. That's going to be telling. We'll see right there. So you can see we came right into supply here, double topped it, broke the low. That's your M formation for murder. So we should be able to get back down to here at a minimum, but ideally back down to 37.94. And then we get a beautiful play to the upside. Last but not least, gold. Gold's making a move on the upside here. There is demand right here. So just broken above this pivot high here. That means if we get back in on a retracement, which is just a move down of a longer move up, the impulsive move up. And if we get back down in here, that's your opportunity to get long this market, and that's at 1803.50 on the gold futures market. Thanks for watching. It's going to be a great time in the markets today. Be safe, manage your risk, and if you know how to hedge your portfolio, put your hedges on. If you don't, you might want to get out of the market or get educated. Thanks for watching. Dale Sargent.